Welcome to the Stage Analysis Members Weekend video. It's Sunday the 14th of August and I'm going to start tonight's video in a little bit of a different order than normal. I normally leave the watch list stocks to the end of the video. I thought I'd show some of those in the first part of the video today instead, so that some of the non-members can see some part of the process before we move on to the more detailed analysis later in the video, going through all of the various things that we look for in Stan Weinstein's method, looking at the indexes, the industry groups, the what's moving, the themes, and the market breadth to see what's going on. As currently we've got a potential move into stage one in the market, with lots of stage two breakouts occurring over the last week. In multiple areas, as well as lots of changes of behaviour with strong moves since the June low in lots of groups across the market. So there's certainly been a change of behaviour, but none of the major indexes are yet above the 200-day moving average, bar the Russell 2000, which has just started moving through that on Friday. So tentative moves at the moment in that area, but we've still got a few percent or so to go in some of the others, like the S&P 500 and the Nasdaq 100, for example. So it'd be interesting this week to see how they do, but I'll cover that off in a little bit. We're going to start tonight's video, as I said, going through some of the watch list stocks. So this is just from the weekend scans and Thursday's post. I covered the earlier in the week watch list stocks on the midweek video, so I won't go through those again. But you can obviously, as you know, if you follow the watch list, it's not a buy list. It's a rolling list where we're looking for stocks earlier than they break out, ideally, or if they have already broken out, then we're looking for them to form the secondary entry points, the consolidation bases after the breakout, for potential VCP patterns, or in the backup with the stage analysis secondary entry point or the Wyckoff backup entry point, etc. So, but for the most part, I'm looking for stocks in bases in stage one. And as you know, at the moment, we've got quite a lot of developing stage one bases, especially with the recent change of behavior in many of them. So some are now starting to transition to stage one, and some have even started to move out into stage two. So, for example, AXNX here. Let's zoom into this one a little bit. So this is the daily chart. You can see it made a selling climax back in late January there, and then started to rally up through February and March before topping out and forming the top of the range here above the 200-day moving average. Then sold back off again with a bit of some spring type action and a test, and then has rallied back up strongly since. And we've now had a new stage two breakout attempt in the last few weeks, and now it's consolidating on contracting volume. So one of the things we look for on a stage two breakout is strong relative volume. So we're looking for, on the daily chart, we tend to look for around 3 times or greater volume, but you obviously can have not so brilliant volume on the actual day itself. So you can see the day itself here was fairly average. It was a little bit above average, but then it accelerated dramatically in the following days. So I think that actually had earnings the following day, or a couple of days after. I think this bar here was the earnings day. So it's moved up since then and consolidated with some tighter volume. So if we drop down to a lower time frame on this, you'll be able to see this a little bit more clearly. So you can see that big volume on the stage two breakouts. This is a 2-hour chart, and now we've got this consolidation base that's been forming since the breakout. You can see the contraction in volume since then, and it's started to tighten up. So a little bit of VCP type action in here. Not brilliant VCP, but it has contracted a little bit. So looking for this to make a stage two continuation move higher here. If we look at the weekly chart, you can see the stage two breakout a little bit more clearly. We've got our original bottom of the base and change behavior. So this is that change of behavior move that we look for to suggest that it's moving out of stage 4 and potentially back into stage 1. So you tend to, I talked about this on previous videos, we look for this, you do swing analysis versus the previous swing. So during this downtrend move here, you can see this swing vastly outweighed the previous swings in here. So this is a change of behavior. It did manage to rally back above the 30-week moving average as well, which we often look for at the start of stage 1. So this gives us our selling climax and automatic rally points So this is we start to draw our base structure from this point, although there is obviously, you can draw further points from previous areas within stage 4. So all of this remains stage 4 in this area, doesn't start to properly transition to stage 1 until started clearing that 30-week moving average there, and then starting to roll back over again. So this is the transitioning period. It's never totally clear whether when you're moving exactly from stage 4 into stage 1, there's not any particular rules like the Wyckoff method with the phases. It's a little bit more open to interpretation. So ideally, I always look for this change of behavior move here, where you get a stronger move that's much stronger than the previous 2 or 3 swings that it's had. And you start to see that kind of broadening out pattern. I highlighted it on the midweek video with some of the software stocks. You get gradually bigger swings, and then by the 3rd or the 4th swing, you see that change of behavior. And then this starts to broaden out into a base structure. So with this one, as I said, we've had the stage 2 breakout last week, strong relative volume. This is the kind of exceptional volume we want to see, more than 2 times the weekly average. You can see average volume somewhere around this kind of area in here, so much more than 2 times the weekly average, which is what we like to see. And then a good follow through this week with a slightly higher high there. So go back to the daily on this. As I said, we're looking for a continuation move now, pushing through to new highs, and for that volume to then expand again on any kind of breakout attempt. If you get a breakout attempt on weaker volume, then potentially it could obviously roll back over again and turn into an up thrust, then start to broaden out and form a broader range. So as long as it holds in this above the prior stage 2 range, it can potentially form a backup range in here, and could come back in for a secondary entry point, which would be around that 66 area if it did. So, all right, let's move on. Let's get back to the start of the charts here. So ABC, this one's a much earlier. So with the stage analysis method, what we're looking for with the watch list particularly is to start to see changes of behavior, to start to see when something moves out of a downtrend, and the start of a base might be beginning to form. So here, this is only just early, starting to curve out. You can see we've got that kind of half cup type pattern developing. This might need to form out much more. You might get a cup and handle type move on this, or it might broaden out. We have got this smaller base structure on here, still holding at that 200-day, starting to make some higher highs. So we have got a few month base breakout potentially in here. So could start to move back up towards the upper part of this range, and then start to form a cup type pattern potentially is what I'm watching for on that. If it doesn't and starts to falters here again, we have an up thrust at this point. If this starts to fail and comes back in, then potentially and starts to move back underneath these moving averages, then that would be a big negative. And if we look at it on the weekly chart here, that could then potentially roll that over, and you could then end up in a stage 4 scenario. But with a big engulfing bar like this at the moment, as I said, looking for a grind up, potentially a cup and handle type pattern, or a inverse head and shoulders type thing to develop on that one. Get back to the got ALB, so this hasn't been on the watch list for a while. The group's been a little bit out of favour since topping out back in, it was during May time. I think the group started to fall over in early June. So it was coming up in the watch list quite a lot through that March, April and early May period. So I remember ALB coming up a lot in the watch list. Go into the weekly on this. I want to show you what I'm looking at. So this one, we had that change of behavior in here into stage 3, and it quickly fell over into stage 4, and then has reversed back up again strongly. So a bit of a difficult one in terms of stage analysis. As I said, you've got this sort of change of behavior type move in here. Then it started to defining the bottom of the range, got some levels in here, and then we've got a potential stage 4 breakdown at this point. But then after a month or two, started to recover back above again. So maybe 3 months there with this big significant reversal candle back into the range again. So recovered back from stage 4 quite early, had this short-term move up where it was starting to get highlighted a fair bit, and then started to roll over again. Again, another kind of spring type action, and there's now moved back up again. So potentially this is a new stage 2 breakout that still hasn't yet cleared the ultimate highs. So there's near-term resistance to consider with that, and the volume is less than spectacular. The relative strength is looking okay. So this one at the moment a little bit extended in the short term with that move. So be looking for this. If we get the free ATR candles up, you can see it's above the free ATR level, which it hasn't been for a while. So this is the free ATR level here, this band. So similar to your Bollinger Bands, these are the ATR levels on the count the channel. So each one is above. This is the 21-day EMA in the middle, and then each one is one level above. So 1, 2, and 3. So when you move above the free ATR level, you can see it starts to show a change of behavior and starts to potentially be on a breakout, or it's short-term extended. So it's sometimes when you've had a big run, like we can see in this one off of a spring type move here. So we had a undercut and rally, spring type behavior. You can see it's already moved 50%-ish up to this breakout point here, so could quite easily roll over here. If it starts falling back over in here and come back in, it comes back in, then obviously this 21-day moving average in here and the 50-day starting to turn up, you'd want to see this hold in the short-term moving averages and start to develop maybe a VCP in here, and then look for a continuation move at that point, but a little bit extended in the short term here. So at the moment, looking for this one to come back in a bit. ALV, so highlighting this one because there's a group theme going on this weekend. I highlighted this on the industry groups post on Friday. So one of the group themes from this week was auto parts. There was multiple stage 2 breakouts in the group. ALV is not one of them. This one's a little bit of a laggard compared to some of the others in the group, but highlighting it because of this base structure in here, the move up to the 200-day moving average and pullback, which has managed to recover back up towards the 200-day again. Volume is very light at this point, so it's a weak rally back up into the 200-day, so it could quite easily roll over and come back in again, but this is starting to develop a stage 1 base. And if we look at it on the weekly chart here, you can see that change of behavior I've talked about again. So we've got this base structure within stage 4, which has been developing, started to move up through the 30-week moving average, touched on that 200-day, and then has started to roll over. So that gives us a new breakout level point in here. So we've got this broader structure starting from this point with the change of behavior up to that rally point in there. So it could make an early breakout attempt. We could see a straight jump up and out. If we do, we'd be looking for strong relative volume, probably more than that, exceptional volume ideally. But if it doesn't and starts to come back in, then we'll be looking for this to develop further, ideally hold these short-term moving averages and give them a chance to cross above, but looking for this to broaden out a bit potentially. AMAT, so this is the only one of these that's reporting this week. So semiconductors is another group theme from this week in the industry groups. So, and from the watch list itself, like the semiconductor stocks were dominant in the weekend scans in terms of which ones actually came through into the final cut. So I think out of the 30 odd stocks in the weekend watch list, about 8 or 9 of them were from the semiconductors group, as they had a move earlier in the week when Nvidia pre-announced some earnings results, guidance that it was going to be less than anticipated, which dropped down quite a lot of the stocks. We had 8 to 10% moves in quite a few of them, but they'd had a really strong run up since early July. A lot of them had made massive change of behavior type moves into stage 1 again. So they shook out and then moved back up strongly again in Thursday and Friday. So there was some big moves, and AMAT was one of them, but not as strong as some of the others. But it's got earnings coming up this week, I think, after the market close on Thursday, potentially. So you've got a little bit of a inverse head and shoulders type pattern developing on this one at the moment. Again, if we drop down, you can see the declining channel. It's just starting to push out of this previous line here is where we had the stage 2 breakdown level. So if we go onto the weekly chart here, you can see the original range here, so I'll give you the broader range and the secondary range. So starting to break down into stage 4 at this point here. You've got that older range there. So, and then on the rebound, follow through move back down. So at the moment, it's coming back into a zone of resistance. But you can see this candle here. So if we zoom in on this one, there was a lot of bars like this week in the semiconductor stocks. So we've had a big strong rally over the last 6 weeks or so, in the semiconductors. They sold off into their short-term moving averages, the 10-week, the 50-day moving average, and then we got these hammer-type candles into the end of the week with slightly positive closes in some and more positive in others. So looking for some of these to start to move back up and out. So at the moment, although this is still potentially stage 4 at the moment, there is a potential change of behavior going on here. Again, we do our swing analysis, so we've got these swings. You can see this move starting to broaden out. We're getting a slightly bigger move here as a megaphone type move that we look for. So a change of behavior potentially, and this could start to broaden out. And if it does, potentially might start to form a higher base structure, potentially in the 120 to 90 range, maybe there. So looking out for that one to continue. AMR, so coal was the second strongest group again this week. It's been the strongest industry group for the last 3 months until a few weeks ago when the solar stocks overtook it. So some of the solar stocks have started to pick up again over the last week after consolidating for a few months. So started to explode higher again. It was the second strongest group mover on the week, very closely following the solar stocks or renewable stocks, as it includes other renewable energy stocks as well, such as the hydrogen cells and the wind stocks as well. So not just solar stocks, but dominated by the solar stocks really. So the coal all still showing some strength in the near term, back through this 50-day moving average with 2 days closing above it in AMR here. So you can see we've got a near-term level potentially that it's testing. There was heavier volume here. If we look at this bar here, so let's undo that. You can see this is that bar there. So volume was heavier than we saw at this point in here. So potentially this could be and looks bullish but acting bearish there, as it couldn't quite break out. But looking to see if this can make a follow through, and some of the other coal stocks as well, as they're looking interesting in the near term. Potentially a cheap type move in some of them, but not brilliant. So they're not my favourites at the moment. After being so strong for a while, they're starting to come off potentially in early stage 3 in some cases. So not highlighting them very much anymore, as once a group starts to move into stage 3, then obviously it's going to chop around a bit, and it's not really what we're looking for. We're looking for stocks that are moving, transitioning to stage 1 or in late stage 1 ideally, and potentially some early stage 2 movers that are starting to consolidate. So in this one's case, if we look at the weekly chart on this, you can see we've got this change of behavior move here in the opposite direction, so potentially the start of stage 3. So at the moment, this one's got a potential stage 3 range starting to develop in here, but so could push up towards the top of the range still, but I'm not looking for this one to continue to new highs at the moment, as there's been a clear, obviously, change of behavior in here. So, but doesn't mean it can't, but that's not what I'm looking for at the moment in this one personally. So just looking for a more short-term move back up to test the highs in the near term. And then obviously we can rejudge it at that point. AOSL come up in the watch list quite a few times in the last month or so. Looking interesting still. So Friday's move here reversed it. It had a gap up on Thursday. Fairly sure that was an earnings move into the 200-day moving average, and then Friday pushed back up again. So reasonable volume there, nothing major. Still forming a small base structure since the stage 4 breakdown in May here. So you can see starting to break down into stage 4 at this point. So if we look at this one again on the weekly chart, a big thing on stage analysis is that you should be looking at charts on multiple time frames. Ideally, when I'm doing my scanning, I use the daily charts to start, and I zoom out to the weekly charts to get the major stage. So you can see on this one, we've got this original change of behavior in here. So actually start your stage 3 range. You've got up thrust coming back in. It attempted to broke down convincingly into stage 4 here, but it's now rallied back up. So this could potentially be a terminal shakeout. We could now be rallying back up in here, and so we could be looking for a move up and out of this one, as this could be a change of behavior back towards stage 1 type behavior. It's not there yet, but the stage 4 looks like it's failed at this point. So looking for this to show a sign of strength, manage start to get back above that 30-week moving average, and then hold it on any kind of retests. At that point in this kind of area, it would be very interesting. So that's what I'm looking for on that one. If we go down to the 2-hour time frame on this one, you can see that move up on Thursday there, and then the follow through back on Friday to get back up to where it originally moved to. So it needs to make a higher high in the near term. But if we go back to our daily, where's our log scale in the base structure here, we've got the 200-day at 45.43. So looking for a breakout above the top of this range, but there is near-term resistance in this one. It's only a short base structure, but as I said, this is a bit of a change of behavior in here, so we're looking for a little bit of a sign of strength, and then for it to hold above that 200-day moving average, the 30-week moving average, and for these short-term moving averages to start to get back in the right order. Let's move on. APAM. So this is another stage one that's not obvious that it was stage one until more recently. A lot of stage one bases weren't. So obviously stage one begins when a stock is still in stage four. You don't know it's in stage one until later in the base structure, if it is forming a fair bit below the declining moving averages. All you know is that a base structure is developing. So this is why I highly recommend you learning the Wyckoff base structures, as they can tell you what's going on in the base structure, give you clues on what's happening with the price and volume action, and help you to get in ahead of a potential stage two breakout attempt, as you can see the developing structure more clearly. So this one, we've got our selling climax into automatic rally, some secondary testing, got further testing as a sign of weakness in this area, which then formed an early spring type action. Then we had a lower high in here coming into a last point of support, and then more higher lows, and we've formed higher lows the whole way up here, back up to this 200-day moving average. So got this level in here. So the first move above the 200-day moving average is often like sold off, as we're in stage three. The first move below the 200-day moving average is often bought. So I would say the vast majority of the time that is the case. So that often becomes the new stage two breakout point on the upside, and the stage four breakdown level on the downside. Sometimes it goes, you can have quick moves and they can knife straight through them, but for the vast majority of the time, the 200-day moving average is a pivot point, and tends to give us the final level that we're looking for. Although sometimes you can get further levels developed, but it tends to mark the stage two breakout level or the stage four breakdown level on the flip side. So again, if we zoom in on this one, APAM, so this, you can see that base structure that's been developing over here. So at the moment, above the declining 30-week moving average still. So looking for a strong move. Again, you'd be looking for more than 2 times average volume. So you're looking for exceptional volume. You can see the volume here at the moment. It's been fairly consistent. So be looking for a bar that really stood out on this chart, probably more than what I've drawn even. So if it did break out into stage two, and that then turning that 30-week moving average up on the breakout. Basically, if you get a stage two breakout and it's still below a declining 30-week moving average, or it still has a declining 30-week moving average at that point, there's much more chance of failure. And the vast majority of the time, I personally don't even consider it a stage two at that point until that 30-week moving average is turning up. It's not in stage two. It's potentially just still in stage one and broadening out the base. So this one looks like it would turn up if we got a stage two breakout, it would turn up that 30-week moving average. So this is what I'm watching for on that, as it's got a good base structure here from, as I said, back in this point in here. So back from early March. So 6-month base structure in there almost, with 5 or 6 months. I think I said 5 earlier. So yeah, 5-month base. Right. APTV, so this one a little bit earlier, you can see a declining 200-day moving average here still, so still well below that, but you can see a developing structure. So one way when you're looking for the transition from stage 4 into stage 1 is you can start to draw from the swing lows, start to draw some levels across, start to see that shortening of the thrust. So these points in here, you can see we had wrong one. these levels here, you can see it started to shorten, each move below getting shorter and shorter. So this is what we called a shortening of the thrust, and then started to move back up and out. So this in here, you can see we've started to move above that 50-day moving average. The 21-day moving average is crossed above, still well below the 200-day moving average here. But you can see this is a little bit of a change of behavior going on in here. And so this is why I'm highlighting this, as this then makes this broader area in here a potential stage one base structure that's developing. We've got some lower levels in here to consider too, but again, if I go out to the weekly on this now, you'll see this a little bit more clearly. You can see this is now looking more like it's moving into stage one. Again, we've got these swings in here, and so we've now got this bigger swing here up towards the 30-week moving average here. So a little bit of a change of behavior going on, which then says that this is potentially in early stage one. See, relative strength is still well below the declining zero line, so that's another clue that you're still in stage one. So at stage two, the relative strength line will always be crossing above or already above. It's very rare for a stage two breakout to still be below the zero line on the breakout. There's not many times that happens. So if the relative strength line is still below the zero line, which is the 52-week moving average of the stock divided by the S&P 500, then you're very unlikely to be in stage two. And again, declining 30-week moving average on this one at the moment. So as I said, we've got some broader structures on here. So if we draw from here, you've got this broader structure. It did undercut in here, so we might be just starting to make a new structure here, and so this earlier bit in stage four here might be less relevant once this gets further along. So I keep pressing the wrong button there. So this may broaden out. We might start to get a further structure in here, but then this area does count as part of the base, but it's also part of stage four. So as I've said before, you don't really know the exact transition point. You're just looking for that change of behavior where you have a selling climax into an automatic rally, and then you get that turn. So in the Wyckoff method, it looks similar to this. You get this kind of move. So you have a selling climax, an automatic rally, and then you get a secondary test, and then you move out of what we call phase A into phase B of the structure, which is the testing phase. And then so you then mark the start of your base structure from here, and then obviously the base starts to develop. You might get a spring later that then goes on towards the stage two breakout, or you might form a VCP type pattern that then moves out earlier. There's many different ways that a base structure can develop, but you're looking for that initial change of behavior where you move from a selling climax into an automatic rally and then a secondary test, and then you start to move into a testing phase. So this is how you start drawing your structure in stage one. You're not necessarily in stage one at that point. You're looking for that big change of behavior. You might be, but it's a potential transition. You need to zoom into the group, look what else is going on. It's not, most stocks don't move on their own. They tend to move in packs. So obviously that's another good way of analysing whether it's in stage one, stage two, wherever.